Bloody hell, it hurts. These were the words that were repeatedly coming out of my mouth at the end of last week as I was sitting in pain on the sofa, as I have done in the past, agonizing about my wisdom teeth in my mouth. And my better half was basically just sitting there looking at me, relaxed and saying, "Serves you bloody right." And truth be told, it does serve me bloody right, because at the grand old age of 50 and a little bit more, I still have my wisdom teeth in my mouth, and I should have had them taken out when I was a teenager. But they are there. They periodically remind me that they don't have enough space in my mouth and make a little push, just to remind me, just to say, hey, we're still here. You should remember we are here, and hope you're enjoying the pain for the next day or two. And it's true. I should have had them taken out a long time ago. Many of you probably can relate to this, hopefully not. But it's never really been a pain or an inconvenience that's been so bad that it's forced me to do something about it. I've always had something else that's been more important or more urgent, or something that I just thought needed more priority than my wisdom teeth. And so therefore I still live with them, periodically reminding me. It got me thinking, it's potentially a little bit like all of those banks out there that periodically get reminded by their aging legacy systems that they are still there, with a little hiccup and an outage and some other problems, particularly as they're trying to modernize. Not enough space, a little bit like my wisdom teeth. It also reminded me of a statistic that came out, I think it was about 2, maybe 3 years ago, that said more than 70% of millennials would much rather visit their dentist than take advice from their bank. And I wonder if that is still true. I wonder if it is still 70%, or whether it's gone up or gone down. We've seen some improvements in customer onboarding by neobanks and improvements in loan origination and some other areas. But has it really done enough? Is it still 70%, or is it maybe 80% now? Or maybe we're lucky and it's gone down to 50 or even lower. And millennials now really enjoy going to their bank, or at least talking to their bank. I mean, with the rise of fundamental uncertainty in the future, I think it's critical that talking to your bank and getting advice on your finances from someone reputable is probably a good idea, rather than relying on TikTok and other social influencers. We'll return back to this area of wisdom teeth in regards to core modernizations towards the end of my little chat here. But until then, I am Pål Krogdahl. I am the Director of Technology, Strategy and Advisory Services at Samlink. You want to know more about Samlink, then I'll share that with you at a later time. But Samlink is a banking as a platform provider, and have been for more than 30 years to more than 50 financial institutions. But for now, for today, I would like to share with you some insights and perspectives from us at Samlink Advisory Services, looking at the current and emerging trends as we see them for the banking industry. There's no question about it. The banking industry has for some time now been undergoing a fundamental disruptive transformation. Admittedly, not all at the same time, but it is a steady march into uncharted territories, driven by the COVID pandemic, global geopolitical unrest, continued changes in customer expectations, and an accelerated growth of digital and emerging technologies. The banking industry is transforming, and I, for one, actually find myself extremely excited about what is happening and where it is going. In 2024, banks face a complex landscape. Banks not only need to balance the paradox of a slowing economy against rising interest rates, they also need to consider how they will protect their profits as well as their future relevance in the continued change in customer demand and customer expectations. It's almost, I would say, like walking a tightrope whilst juggling in a storm. Regulatory compliance for any bank is top of mind and continues to be so in 2024. As we will see a continued flurry of regulatory change going forwards, regulatory adaptation is not just a compliance exercise, it's a survival tactic for the banks in 2024, and potentially a competitive advantage for some banks if they turn it to their advantage. All this is underpinned with a continued need for digital transformation and innovation. The days of putting what I would call digital lipstick on an analog back end are gone. Digital transformation and innovation are no longer luxuries, but necessities that need to be dealt with. And all this whilst competitive dynamics and industry convergence continue reshaping the banking battlefield. It's a wake-up call for bankers, I would say. Adapt swiftly or risk the consequences of what's going to happen. So let us take a quick look at some of the key dynamics we at Samlink Advisory Services believe are shaping banking in 2024 and beyond. The world is digital. The way we conduct business is digital. The way that we communicate with each other is predominantly digital. The way that we interact with our friends, our colleagues, our loved ones is predominantly digital. The way we communicate is in one way or another influenced or touched by digital. And banking is no different. Extreme digitization is revolutionizing banking. And this trend is accelerating at a foundational speed. Think of it as the banking world's version of a smartphone upgrade from a simple communication tool to an indispensable life manager. But the way that consumers today are using digital is changing. I only need to look at how my teenage kids use their smartphones and other digital devices, and their expectations for instant gratification and hyper-personalization. It's completely different than how I use mine. I mean, for Christ's sakes, my children have even removed the call button on their phone. They don't make phone calls. In fact, I don't even think they know how to receive phone calls. It's all done through chat, instant communication, and other media. They no longer use their smartphone as a phone. This is not just about adopting new technologies. It's about reimagining user engagement and the banking experience. Digitization is the new currency of customer engagement and operational efficiency. But many banks today have not fully grasped digitization. This is not about putting your existing paper-based application forms and linear processes online on your website. It's about reimagining the art of the possible. Banks need to harness this power or risk being left in the digital dust by new entrants that know how to do this better, how to really engage with their customers and drive customer delight. And the ones that often can do this better are not the traditional competitors that the banks have faced in the past. It is clear that the banking landscape is no longer exclusive to the banks, and banks who think they will dominate and own the customer experience and loyalty going forwards are very much mistaken. Tech giants and fintech startups are gatecrashing the party right in front of the banks. They bring agility, innovation, and customer-centric models that challenge the status quo. We're witnessing these non-financial players stepping in to delight customers with outcomes and not outputs. They can delve and deliver a richer experience and engage with the clients where they are, and not expect the clients to come to them like the banks traditionally have done and how the banks still operate. Banking is becoming invisible and embedded. Consumers do not want to do conscious banking anymore. They do not want to buy a loan or buy a mortgage. They want to have mobility and a place to call home. I keep hearing that banks believe they will continue to own and manage their customers' journeys and be their main financial provider, as they have done traditionally in the past, and they believe that this will continue going forwards. I'm sorry to say that consumers actually have other ideas. Most people today have a relationship with 2, if not more, financial institutions, and at least 10 more different apps and providers on their digital devices, helping to enrich their financial life, be that with payments or other services that maybe they feel can be delivered by third parties better than their banks. And for many, the platform that they use most frequently for day-to-day banking transactions is becoming more frequently their digital wallet of choice, and therefore not their banking app. Banks must either adapt to this new competitive reality or face being sidelined. It's time for traditional banks to reinvent themselves, or at least set a strategy for how they will engage in this future proliferation of banking apps and banking services and a growing platform paradigm. But it's not all bad for the incumbent banks, I would say. One thing that fintech community and Silicon Valley got wrong was the unbundling of banking and the banking experience. Whilst the trends did give consumers new and exciting experiences, we are now at a point where most consumers have a proliferation of independent capabilities and apps spread across a growing number of independent apps on their mobile phones. For most consumers, this is no longer a sustainable way of living and managing their money. And there is a growing trend towards what I would call rebundling. I, for one, can admit that I do not want my phone filled up with a multitude of applications, all doing roughly the same thing. Here in Finland, I've got a great example. There is, almost on a weekly, if not monthly basis, a new app, digital app, provided to manage parking in Helsinki. I don't need 5, 10, 15 apps to pay for my parking in Helsinki and have to figure out where I've parked, which provider, which app. I'd much rather have one app, a bundled app that would know that for me and manage all of that embedded, simply and straightforward for me. In fact, even better, if my phone could notify I have parked, this is where you've parked, we will automatically tell and start the subscription for that time that you're parking. Are you happy with this, Pål? Yes. In the rebundling of banking services, the banks have an advantage based on scale, brand, trust, and experience. We witness banks recalibrating their strategies. It's about offering a one-stop financial experience, akin to a Swiss Army knife, you could say, for finance. This shift reflects a deeper understanding of customer needs and a desire for integrated, hassle-free services, even in our banking experience. Banks must become masters of convergence, blending various services into a seamless customer journey. It's time to reimagine the banking app. It's time to reimagine what customer onboarding could and should look like. It's time to reimagine what loan origination could and should look like, along with reimagining what you could do to your customers if you could combine banking and non-banking capabilities into a single point to enrich their experience. This rebundling of banking brings with it an opportunity for the incumbent banks to regain dominance based on their scale and their rich wealth of data, but only if they can get a proper grasp of the data and how to use it going forwards. With the advent of generative AI, the use of data and AI in banking is hitting new frontiers. We're talking about a paradigm shift from reactive to predictive banking. Banks can now anticipate customer needs, personalize services, and enhance risk management. They can also use generative AI to help them in the area of compliance and management of regulatory issues. But the truth is that most banking executives do not truly understand yet the impact that generative AI will have on the industry and how to engage in this new space. Here I will come with some good news, but also potentially a small warning. Do you need to fully embrace generative AI today and put all your efforts, focus, and money and investments into generative AI? From my perspective, no. There is still time, but do not sit on your laurels and think you can watch the others out there progress and decide later what you're going to do. You will not be able to catch up with those that have been continuously looking at generative AI. It is better to be on that generative AI train, even if it is sitting at the back, than to stand on the platform watching the train leave. Because as soon as you see that generative AI train disappear out of sight, the quantum train will be pulling into that station faster than you can react. And at that point, you will have lost the game. But as you seek to adopt generative AI, I bring some recommendations, some small ones. Not all generative AI are the same. You should see generative AI through three distinct lenses. There's consumer-grade generative AI, such as what we're used to in the public domain, like ChatGPT. We expect a certain amount of hallucination. We assume we maybe need to validate some of the answers we're getting back, but ChatGPT in general gives us advantages to streamline some of the things we're doing, be a sparring partner and give us some insights, do some research, those sort of things. Then you have enterprise-grade generative AI, such as Microsoft Copilot. And then lastly, you've got what I would say is generative AI for regulated industries. That brings with it a clear need for transparency, openness, trust, and targeted use. Targeted use towards three distinct usages. There's digital labor talent, such as optimization and orchestration of business processes and enriching that employee experience. Then you have engineering productivity for IT with code generation and creation of documentation from legacy code and other code. And also for code transformation. We've seen a lot of generative AI and AI capabilities being used to modernize code. And lastly, obviously for customer care through advanced virtual assistants and advisory services, creating future customer-centric banking strategies. A key area for future customer-centric banking strategies and advisory services where AI can bring foundational strength is in the area of sustainability and the wider subject of ESG. Sustainability is no longer just a buzzword, it's an imperative. Green finance is transforming from a niche offering to core business for the banking industry. Banks are now key players in funding sustainable innovations, reflecting a commitment to environmental stewardship and responsibility and responsible banking. And with this comes the need to not only drive advanced analytics and availability of sustainable choices, but also delivering sustainable services and options to their customers. An area where we see generative AI bring strength and a competitive advantage to those banks that take advantage of it. This is about aligning profit with purpose, ensuring long-term profitability in a rapidly changing world. And remembering that a growing number of consumers will seek sustainability in their daily choices and put sustainable choices in front of others. It's important for banks to therefore show that they are sustainable. But in this world of changing customer expectations, the growth of digital, a foundational shift to sustainability and new technologies emerging at an increasing rate, the regulatory authorities are playing a continued catch-up game. And for all banks, compliance with regulation always have been and always will be a first priority. Regulatory intensity is not just about ticking boxes. It's about integrating compliance into the DNA of the bank and the bank's operations. This era demands a proactive approach to regulation, turning it into a strategic advantage rather than a cumbersome obligation. And again here, as I have already mentioned, we see a strong alignment to generative AI. Using generative AI and AI capabilities to not only help you to understand and interpret the regulations, but to monitor, manage, and react to compliance and compliance alignment. A close family member of compliance is security and fraud, and I believe we will see a foundational growth in cybercrime in 2024. In actual fact, now sitting at the end of January in 2024, we've already seen an increase of this being reported. This obviously will be driven by the continued digital transformation that the banks are engaging in the industry. The growth of digital first, and obviously the continued global political turmoil that is impacting all of us on an ongoing basis. But as we move more and more into digital engagement, digital way of living, we open up parts of our infrastructure and capabilities to wider attack. This is going to become more and more critical. If we pull all of this together, I believe we will see the growth of new business architectures and business models within the banking industry. And we're already starting to see this happening. The growth of embedded finance, platforms and digital wallets, exploring new services. It will require the banks to move away from traditional siloed structures to more agile, customer-centric models, and even more so than they have in the past. Customers are asking for outcomes and not outputs, as I said before, and for banks to come to them, to meet them where they are in their daily lives. Most banks are falling short on delivering on these expectations, and non-financial players are dominating, pushing the banks basically to the back seat as they step in and take the steering wheel. Banks need to redefine their products and channel strategies and the business models they deploy to deliver value to consumers, even when they do not manage the customer journey themselves. This is about being bold, embracing innovation, and experimenting with new business models. The future of banking lies in flexibility and adaptability, responding swiftly to market changes and customer demands. I ask you one small thing. If the next generation of adults no longer want to own a home or buy a car, what would it take in the Nordics for e-passi to own their experience on a daily basis for basic financial services? I mean, they're already almost there. There's very little missing from their digital wallet solution to basically dominate that customer engagement, especially in Finland, and very rapidly into the whole of Europe. Owning the customer journey and becoming their primary financial provider comes down to simplicity, transparency, and trust. With foundational changes ongoing and the continued disruption of the industry, consumers are more uncertain and lost today than they have ever been. The future leading banks will be custodians of trust and deliver advisory services that truly help and guide the consumers in their financial life. We are in a time of foundational uncertainty of the future, where financial capabilities have been expanded at a fantastic growth, particularly in the retail banking space. And most people are scared, bewildered, and not sure what the impact of their choices are going to be on their finances going forwards. Banks are shifting from transactional to relational models. This is about customer centricity and not product centricity. It's about understanding and fulfilling customer aspirations, building deeper, more meaningful relationships with your customers. This new focus demands a holistic view of the customer, leveraging data, technology, and human insights to deliver expectational value. The days of information asymmetry are gone. The banks must be more open and transparent about their operations, the value they deliver, and how they deliver them. I will say though that all this becomes a lost discussion if you are unable to deliver on these new trends. Most, if not all, incumbent banks are facing a critical burning platform that is preventing them from delivering on these new trends and staying compliant at the same time. Most importantly, probably staying compliant. The banks are basically sitting on an aging legacy back end and maintaining manual processes still today, which is driving an expanding chasm to all of the digital lipstick that they've been putting at the front ends. With these new digital capabilities being improved on, what banks have done is basically put most of their investment onto the front end and using what's left to keep the lights on the back end systems. A little bit back to what I was saying at the beginning with my wisdom teeth. Not enough pain to do something about it. But just like I've now got to the point where I realized I need to have my wisdom teeth taken out just for my sanity, if not for anything else. I'm faced with a new thing that I need to think about. Do I take them all out in one go, a big bang, and deal with all the risks and complexities with that? Will that mean more time off work, more downtime? Are there other risks and complications that I maybe need to think about? Or would I do better to have more of a progressive approach? Maybe take one out or two out at a time. Let it heal. The time for recovery will be less. The pain will be less. The impact will be less. And this is what we're seeing. We're seeing the need for banks to take a progressive approach to modernization. And that's what we help banks with at Samlink, to take that progressive approach in a risk-free way. Also, what banks need to do as they're looking at this progressive modernization is to find a way to tip the balance. Most of their investment should not be put on keeping the lights on their legacy systems. It should be on continuing to drive that enriched digital customer experience at the front end. But by taking some effort in modernizing and streamlining the back end, using generative AI, using best-of-breed ecosystem partners, you can change the balance so that most of your return on investment does not go on keeping the lights on. It goes on developing new enriched capabilities at the front end. Like I said, most banks are still putting their money in on keeping the lights on. With the rising interest rate that we're having at the moment, it's a positive impact on your balance sheets. For the time being, I'm wondering, maybe now is the time to invest on your core systems. Like I said, what would it take for a player like Airposse to completely dominate? This was a quick glimpse into our report, the Samlink Equation 2024, and what we see as being the main trends going forwards in 2024 and beyond. Hope you've enjoyed it. If you've got any questions or want to continue the discussion, then please reach out to me. You can find me on LinkedIn, or you can find me through the samlink.fi website. I'm looking forward to continuing this discussion with you. I hope you've enjoyed it.